What's up, you guys? Welcome back to the Average Joe Investor channel. In today's video, we're talking about dividend stocks, but not just any dividend stocks, quality dividend stocks to potentially add to your portfolio today. So we're going to break down what exactly constitutes a quality dividend stock. We're going to use my monthly dividend stock spreadsheet to filter through all of the noise and all the different dividend stocks out there to identify the best ones right now to add to your portfolio. And with this process, we're going to look at 6 different dividend stocks that have all of the right metrics to be a good fit for your portfolio. Okay, so as we look at this list here, we've got, over 600, almost 700 dividend stocks that have been raising their dividend now for 5 consecutive years. By the way, access to this spreadsheet and all the spreadsheets I use on the channel and access to my own income strategies are available by joining the Average Joe Investor Patreon community. If you want to learn more about joining, check out the link down in the description below. But like we've mentioned many times on this channel, not every dividend stock is a good fit for your portfolio. Whether it comes to revenue growth, dividend yield, free cash flow, payout ratio, etc. Some dividend stocks are just not quality dividend stocks. So let's go ahead and narrow down this list. First, let's just move from left to right here. Let's look at revenue growth. We want dividend stocks that are consistently growing their revenue. So first thing we're going to do here is filter only by dividend stocks that have revenue that is in double-digit growth over the past 1, 3, and 5 years. Next, we want to make sure that our dividend growth rates are exceeding the long-term inflation rates. And then what we also want to do is take a look at the payout ratio based on free cash flow and make sure that that is a reasonable number here, that we're not spending too much of our free cash flow on paying out a dividend. And that takes us down to 37 different dividend stocks. And of these 37 dividend stocks, 6 of them have yields over 4%. Number 6 on our list here, the one with the lowest dividend yield, is Civista Bank Shares, ticker symbol CIVB. They're in the financial sector and they are a regional bank. They've been providing financial solutions to generations of businesses, families, and individuals since 1884. And they have 43 locations in northern, northwestern, central, and southwestern Ohio, and southeastern Indiana. They've been raising their dividend now for 13 consecutive years. You can see that their 1, 3, and 5-year revenue growth rates are strong at 30, 16, and 16%, and their dividend growth rates are also very strong at 9, 12, 14, and 15% over the past 1, 3, 5, and 10 years. Their current dividend yield is 4.26% against a historical yield of only 2.8%, which is a 52% discount. And you can see that their free cash flow payout ratio is only 18% over the trailing 12 months and 31% over the previous year. And free cash flow has been very stable year over year. Number 5 on the list is the First Bank Shares, Inc., ticker symbol FBMS, also a regional bank. This company is headquartered in Mississippi and was founded in 1996. It has operations in Mississippi, Louisiana, Alabama, Georgia, and Florida. The First Bankshares has been raising their dividend now for 7 consecutive years, so it doesn't have as long of a history, but you can see that their revenue is very strong over the 1, 3, and 5 years right here. And what I really like about this company is their dividend growth rate. 22% growth, 29% growth, and 35% growth over the past 1, 3, and 5 years. They currently yield 4.14% against a historical 5-year yield of only 1.93%, which makes it effectively a 115% discount. And their dividend, based on their free cash flow payout ratio, very safe at 30% over the trailing 12 months and 24% over the previous year. And when you look at their free cash flow per share over the trailing 12 months and then 23 all the way back to 2020, very stable and growing. Next up, number 3 here, our first REIT of 3 that we're looking at, Alexandria Real Estate Equities, ticker symbol ARE. This is a very unique real estate investment trust. It's all about life science. In 1994, they created Alexandria as a startup and had a bold vision to create the first real estate company uniquely focused on the essential life science industry and the highly complex infrastructure needed to support its mission-critical work. This REIT has been raising their dividend now for 13 consecutive years, and they've got really strong metrics here for their revenue and dividend growth. 11, 15, and 16% revenue growth over the past 1, 3, and 5 years, and their dividend growth rate also very stable at 5, 6, and 7% over the past 1, 3, 5, and 10 years. Their current dividend yield is 4.26% against a historical average yield over the past 5 years of 3.15%. So effectively a 35% discount. You can also see their payout ratio based on free cash flow at 53 and 63% trailing 12 months versus whole year. And if you look at the free cash flow per share, it is growing year over year. All right, the fourth one we're looking at here is Essential Properties Realty Trust Incorporated, ticker symbol EPRT. Essential Properties is another REIT, and their focus is on acquiring, owning, and managing primarily single-tenant properties leased to middle-market companies operating service-oriented and experience-based businesses through sale-leaseback transactions. That includes restaurants, car washes, gas stations, vehicle service locations, and more. They have nearly 2,000 properties in 48 different states and 374 tenants and 99.8% leased. They've been raising their dividend now for 5 consecutive years, so just now breaking into this spreadsheet. And their revenue is really strong here at 21.8, 27.5 and 31.9% over the past 1, 3, and 5 years average revenue growth. Their dividend growth rate also very safe at 4, 6, and 21%. It's definitely slowing down a little bit here, but they've also got a great dividend yield at 4.7% against a historical yield of 4.58%. So very stable on that dividend yield over time. And you can see their payout ratio over the trailing 12 months and over the previous year based on free cash flow is 71 and 72%, so very stable. And when you look at the historical free cash flow per share over the past few years, very stable and growing. Number 2 on this list is one that's been talked about a lot recently, and that is Vici Properties, ticker symbol VICI, another real estate investment trust. If you've not heard of Vici Properties, they're one of the country's largest owners of gaming, hospitality, and entertainment destinations. They're part of the S&P 500, and they own locations such as Caesar's Palace in Las Vegas, MGM Grand, the Venetian Resort in Las Vegas, and in all, 93 experiential assets across a geographically diverse portfolio consisting of 54 gaming properties and 39 other types of experiential properties. Vici has been raising their dividend now for 6 consecutive years, and they have really strong revenue, 54, 47, and 32% over the past 1, 3, and 5 years, and their dividend is growing over the past 1, 3, and 5 years by 7, 9, and 10%. Current dividend yield, 5.62% against a historical average yield of 5.1%, so effectively a 10% discount. They have a little bit elevated payout ratio based on free cash flow at 79% and 76% for the trailing 12 months and previous year. However, with real estate investment trusts, this is normal because to keep their preferential tax status, they have to pass through 90% of their taxable income. If this number was 120 or 130%, it'd be alarming, but at 79 and 76%, not a problem at all. Last dividend stock we're talking about here is one we've talked about quite a bit, and that is Arbor Realty Trust, ticker symbol ABR. This is a mortgage real estate investment trust. They're in the business of lending money, specifically when it comes to multifamily and commercial real estate clients. They've been raising their dividend now for 11 consecutive years. Their revenue growth is really strong at 12.8% for the 1 year, 27% for the 3 year, and 15% for the 5 year average revenue growth. Their dividend growth rate is also really solid at 9, 11, 11, and 13% over the past 1, 3, 5, and 10 years, currently yielding 13.26% against a historical yield of only 10.56%. Which is effectively a 26% discount. And their payout ratio is 75% over the trailing 12 months and the previous year, 27%. Now, I recognize that we've got 3 companies here from the financial sector of the economy and 3 from the real estate or REIT sector. And that doesn't mean to say that you should just own REITs and just own financial companies. This is always a fluctuating list of companies that are good value right now. And these are 6 companies that you should take a closer look at to potentially see if they're a good fit for your portfolio. This dividend stock spreadsheet that we're looking at in this video are available by joining the Average Joe Investor Patreon community. If you want to learn more, check out the link down in the description below. Hopefully you found some value in this video. Make sure to leave your 2 cents down in the comments below. It's my goal to respond to as many comments as possible on the day I post a new video. That's all I got for you guys. Have a great rest of your day, and thanks for watching.